Good afternoon. This is Ken Long from Tortoise Capital with a look at a volatility trade for the trade of the day for January 22nd, 2013. Start off from the weekend report with a review of the market conditions. This is a daily chart looking at 3 months on dailies. And we have a market that is moving up. It has cleared all of the red lines, which are resistance levels, and are now support levels. It's outside of the river, which is the 30-period Bollinger Band plus or minus 1. It's in the floodplain, which is between 1 and 2 standard deviations above the mean. The river itself is well above the 200-period moving average. The 30, the 50, the 10 moving averages are all up. ADX is improving, but it's not overblown yet at 25 with bulls in charge. We're overbought on Williams percent R. Percent price oscillator jaws are open to the upside, and we're in bullish normal conditions. Basically, everything is set for continuation trades to the upside, which is good for inverse volatility. So we're expecting a potential for good moves in volatility, either on a reversion to the mean, in which case this bullish move would be shocked and it would be a sharp move down, which would be great for volatility on the long side, or volatility will continue to compress, and that will be an inverse trade in volatility. The next thing we'd look at is looking at the risk Z, which is a comparison of the 30-period moving average and the 10-period moving average of the VIX, taking that number, consulting a 20-year look-back period for the minimum, the maximum, the average values of that ratio, and the standard deviation. And so today, going into Tuesday, it was at 1.17. This is the time series, 6-month time series of that ratio. You can see it's at a very high 1.17. When you convert that to the z-score, which is the value divided or minus the average divided by standard deviation, you find out that today's value is over 2 standard deviations above the average. If you treat plus or minus 1 standard deviation as normal, this is really an extreme lack of volatility. You can see how the volatility is leaving the market, and it's at an extended range here for like 6 days. It's been above 1.0, so that's typical of a sharp continuation of that trend, the upward move, which is inverse to volatility, or it's ripe conditions for a reversal. When it reverses, it's not unusual to see short-term VIX to make sharp moves in our favor. However, this could still be early in what could be a very long run to the upside, given that there's no resistance overhead. So about 5 months ago, you can see how that lasted a long time, almost 2 weeks. And other times that volatility rolls over sharply, and then you get the sharp adverse moves in the market, which is a spike to the VIX. But we're still early in this move, it looks like. So we're prepared for a wild continuation of volatility or a sharp reversal. In either case, we're going to be volatility traders today. And so this is on 3-minute charts intraday on January, actually, that should read 22nd, sorry. We're looking at symbol SVXY, which is the inverse of the VIX. And this is the opening. It traded off down to a low of about 83 1/4. We get a regression line crossover outside of the river. We buy when the price and the 2-period Bollinger Band enter the river. Get our entry at 83.60. We're using a 30-cent stop. It trades up. It holds at the Bollinger Band mean, continues, leaves the river, rolls over. And as it's approaching a regression line crossover, we take our exit on one position at 84.40, 2.6 R in about an hour. It sells off to the mean, holds the mean, departs the river again. Now, what I like about this is that the 30-period regression line left the river here and had never even looked back. The 10-period regression line rolled over, so we buy the second leg of this up at 84 1/4. It just takes off. It clears resistance. I wait for it to clear the previous swing high from Friday's close by the second position at 85.05, and that's with about a little over 3R in hand on the first position. So we buy a second position here. It just is running away. We're moving the stop up as we go. Enter the third position at 85.60. It trades up to 86. We've got our stop locked in here around 85.65. It turns out that that thing goes all the way up to 86.40. That rolls back 86.25. We feel full. Take the exit on everything and knock out 12R. So that's between those two, it's 14 and a half R. There was more later this afternoon, but that's just kind of the morning play, a normal regression line crossover and an entry. If we hadn't made that first trade, this wouldn't have been a continuation, but rather a sideways quiet channel, and that would have been the natural place to enter, natural place to re-enter with 3R in hand and momentum and clearing resistance. So that's 14.5R on 22 January in the volatility trade, the intersection of preparation and opportunity. Thanks for your attention.